Good morning, everyone. How's everybody doing this morning? Good. Well, as we get into the week here, I'm going to take a quick look at where we are in a bigger picture sort of thing. We have we're working out this 55.84 level. So you could see tonight's inventory. And this is the cool thing about market profile, right? Market profile tells you very quickly at a quick glance where your inventory is being where it's priced, right? So you know whether you're shorting at the lows or buying at the highs, and you can keep from doing those things. Here, because now I posted earlier in the room that some of the brokerage firms had raised margin requirements because of the news. Um, so the overnight inventory is long because most of the trading is above yesterday's close. Here's yesterday's close. So you look for a correction lower. If that continues into RTH, you'll look for a correction lower. The market is, every day it's got a lower low. So it's trying to find that bottom. And we want to see whether or not it will hold the low of 2 days ago. I'm starting to look at that again, right? Even though T plus two doesn't work anymore, or it's not, it's a T plus one trade cycle on equities, settlement cycle, I should say. I'm just going to be curious and see if we can hold the low of 2 days ago. That does help give a bit of stability to markets. The low of yesterday is going to be critically important again. Can we hold it? We are inside yesterday's range and we're inside yesterday's value, which means we're inside the cost basis of yesterday. So that's where 70% of yesterday's distribution inventory was priced. We are taking what we bought underneath the close and selling it above the close. That's normal Globex behavior. When markets sell off, if we had panic selling, we'd be all the way down here underneath 55.20. So the fact that the market sells off and then at nighttime we can retail it out for more money, right? Oh, we've had margin calls every day now, Raj. We've had margin calls. I would suspect a lot of people, and we'll take a look at a daily chart, and that'll kind of make every time you take out the previous day's low, right? People who bought securities on credit are not in a good position, right? This is what we call a margin shakeout, right? I'm sure if you look at the 13Fs after this quarter, I doubt BlackRock sold 500 million shares of Apple, right? Because it only trades 40, 50 million shares a day. We need some sideways action where the lows start to hold. That will cause price stability. Price stability creates investor confidence. Now, anyone who's ever worked in a boiler room, right, understands that if you don't hold the stock stable, retail investors won't buy. And that pretty much holds for anyone, not just retail, right? Price stability creates confidence, right? So when people see other people lining up to buy and they see that stability, they'll jump off their wallets. Until then, right, we're in this back and forth, trying to find a bottom. Now, I am not, um, you know, I'm not a person who likes to call bottoms, so I just stay away from it. Um, I don't want to deal with that at all. I just want to wait until the market tells me that it's put in a bottom. Hey, Phil, good morning. How you doing? So that's what we're looking for now. In the meantime, while we're waiting for a bottom, let's do a few trades, right? Let's do a few trades. So let's go take a look. We know overnight inventory is long, right? There's all that action above the close, right? There's the point of control from yesterday, and the close are, within a tick of each other. Our low is down here. Now, here's the interesting part. If you look at 55.72 and a quarter, that low at N and O period have not been breached yet. So that's where the bid is currently through Globex. What does that mean? That means people who got caught short down here underneath 55.56, because when a market goes down here, there'll be a ton of people who follow it and get caught short. They'll average up in J period, right? And then as you see, when N and O were lower than the M period, the last half hour of the day, there was a steady constant bid there because both half hour bars have the exact same low. That means that they saw buyers there and they moved away from them. The overnight low confirms that there are buyers underneath 72, right? So, yeah, so it's Friday's low is just a little bit lower here, right? So anyway, we just watching to see whether or not that's going to hold. When London opens now in 20 minutes, let's see if the overnight low and 72 hold. I've done up the balance zones, and the range is a little tight this evening, right? Our range is a little tighter than we usually have it. It's 77.5 to 98, so it's a smaller range. So the balance levels, they're about 3 points today. So I use this as a balance, 89 half to 92 half, double it down to 83, double it down to 71. Views on 34. 55.34? Sorry, Phil, um I have no clue. Yesterday's low? Listen, in this market, I think it would be foolish to not think that the low would be tested, right? So there was competitive buying down there yesterday, but that was quite a while ago. So until we get back down there, I have no idea what's lurking underneath. Right now, I don't know what's lurking underneath 72. If we break 72, then I'll start thinking about what am I like, so cuz I'm a day trader, right? I won't be targeting this level, right? Because of the way I trade, right? So if we take out 72, my next big level here is the stop of the J low at 55 and three quarters. If that gets taken out, okay, now 55.34 comes into question, right? But for now, you can see, look, M period couldn't take out the low of L, right? M period couldn't take L, right? Found responsive buying. So there is buying here. They're front running those stops. They're front running the overnight low. So for now, 34 is not a question. Later on in the day, though, Phil, right? When the big kahunas wake up and start trading, and you might get some margin calls and you might get that selling while we look for that low, it definitely could trade. We could trade all the way down to 5,500, right? What I'm looking at right now on a larger level is that 55.84 level of mine. And let me go mark it in. I'm just going to mark that in, and I shouldn't make it yellow. Hang on. Color for it. And I want to see whether or not we accept or reject that level. There's not going to be much to do until CPI, right? They're charging you $300 for a micro. I'm still on sim. I haven't even taken a trade yet. And my other trading, where's my other? I haven't even opened my second Sierra chart. I'm going to open it up now. Right. So when I start trading, I take a very leisurely sort of approach. I come in, I spend some time, I watch it, and if I miss trades, I don't really care because I'm here all day, right? I'm here all day. If I miss a trade, it's not the end of the world, right? So let's see. Okay, now I've got stuff open, and let's see. That was a nice move. So now we have, where's the short-term inventory, folks? It's underneath 86, right? Because we went down here. If you went and drew a volume profile, right? Say you draw a profile from here to here. You see, as the market sells off, right? You can see, oh, there's people trapped in that 55.90, 55.90 to 92. Oh, they're dumping. Oh, look, there's the dump. There's the dump, right? Now the short sellers come in and start covering under 80, right? Now you'll watch from 80 to 84, they'll start building out a wholesale position. Watch that, watch that, watch that, right? And then they'll sell a little bit above 83, but they hold 83 half. That brings buyers and zip right back up to 89, right? So that is the anatomy of a liquidation. At first, the first buyers under 80 are short sellers. Then wholesale will build a position on top of those short sellers, right? Now, how do I know this? Because this was my life, right? My life was distributing size. Most traders would work orders and things like that. My entire life was spent distributing stock for people who paid very little for that stock because they took the first risk, right? The smart money people. We have a poor low, so we have competitive selling up here, right? This just helps you understand. Now we're back into that balance, right? We're back above VWAP, right? Right? Where's VWAP? Oh, right? VWAP's right here, 88 and change, 89, let's call it, right? So accumulation under VWAP on a liquidation. Now we're going to take this cheap crap and sell it up here, right? Because as they say in Salt Lake City, it's just commerce, baby, right? It's just commerce. That's all this is. There's nothing more. You have to remember that this is a market. And in a market, you distribute product, right? And he who has the lowest cost basis wins. Okay. That's how markets work because you can sell it down to your cost basis. If you paid $8 for something and I sold it to you, but I bought it at 3, when you puke it out because you can't hold it any longer, you're looking for 10, I can sell it at 7. You'll go to sell it at 7, I'll sell it at 6. You go to 6, I go to 5. Finally, you puke out of it at 5, right? I buy it back at 5. We lift the market back up, hold it steady, right? New people come in, lift the price, I sell some at 6, sell some at 7. Right? That's commerce. That's a nice recovery from 80 all the way to 92 in just a few minutes. Okay, so we know that there's a decent bid down there. Any questions? Right? Yeah, this is just a sales chart. That's all it is. This is nothing more than a sales chart, right? It's telling you how the sales are going on a minute by minute basis of ES contracts. That's all it is. There's nothing more complicated than that. If you overcomplicate it, you are really going to mess it up because you will not be able to think clearly when you need to, which is what execution is, right? Execution is hard enough. Don't go effing it up, right? By overcomplicating it and looking at, like, I see people on Twitter, and God bless them, they've got like a 3-page trade plan for every day. And they can't, there's no way you can execute on 3 pages when you're in the heat of battle, right? Where's the inventory? Right now, the inventory is underneath us, right? Because we just corrected it. We corrected it here at 6:30, right? Corrected it till 7:30. So we spent an hour under 55.86 picking up all the loose change. Now we're going to take that and sell it up here and distribute it. It's not rocket science. None of this is random. If you think markets are random, Jesus, I've got some beautiful oceanfront property in Saskatchewan to sell you, right? Beautiful weather too, right? Right outside of Moose Jaw, right? There's nothing random in business, okay? What's random is us. We are the random part, right? These people who are buying and selling thousands of contracts, they know what they're doing. We are the random. That's what the books don't tell you. They have an agenda, and our job is to figure out the agenda and trade with the agenda instead of fighting it, right? Instead of fighting it like, toddlers screaming and yelling and then screaming that the market is rigged. The market is not rigged. The market is, it seems like the market is rigged because you have no clue what the hell you're doing, right? So, of course, the first thing a human being is going to say is cry foul, right? So now we're in distribution. Let's see what happens. The trading's going to slow down a little bit. I'm looking for sellers at 92 and a half. See, look at those last 3 candles. Check it out. Why did I say I'm looking for sellers at 92 and a half? Look at 1, 2, 3, 4. 4 1-minute candles with the exact same top. What does that mean? You don't need Bookmap to tell you what that means. That means that at that time that there was a seller or a group of sellers competing there, right? You don't need any special software, just a little common sense, right? The top of the candle is created by the initiating seller. If the initiating sellers are competing, they will push price down because they'll undercut each other. If they see buyers, they will lift the offer. You see? It's very simple. See how the offer lifts right to that standard deviation. There, the seller steps in, the offer moves down, right? When you rewind this, just watch that, right? I suggest that people rewind their chart, use chart replay at the end of the day. I used to do it all the time. It will really help you you'll start noticing things. And if you're not always jonesing for a trade, right, you will be actually able to watch and observe the market with some sort of, to observe something with having a attachment to the outcome, right? Because if you're in a trade right now, all you care about is whether that trade's working or not. You're not paying attention to any situational nothing, right? So if you're short and the offer is moving up, you're not even watching that. You're like, it's got to go lower. It's got to go lower. I'll sell some more here. And then look, now you're just getting your ass handed to you, right? So never short a market where the offer is moving higher, right? It's not rocket science. If you can sit and watch something, and here's the challenge that I'll submit to you guys. Try and watch just one chart. Take a 1 minute candle chart, put some lines on it, and just focus. See if you can focus on one thing for 60 to 90 seconds without looking at the VIX, without looking at your phone, without looking at, you know, some crazy, you know, order flow tool thing. Can you just observe what's going on and focus? Build that 60 seconds out to 2 minutes, 5 minutes, right? Where does someone start understanding the market? Come check out our trading room for 7 days for free. I guarantee you'll learn more in 7 days than you will in 10 years anywhere else. And it'll be actually information that you can use to make money instead of all this double talk about stuff that doesn't matter, right? It's a very simple business. It's complicated if you make it complicated. It's a simple business, but it is also one of the hardest businesses to execute on, right? So we focus on giving you the tools to execute, right? And you practice that execution mechanism over and over again so it becomes like breathing. So as soon as you take a trade, you put your stop in and put your target in, right? So those are automatic things. There are things that you watch for while you're in a trade. Traders use the word monitor for continuation, right? Which is a fancy way of saying, what the hell's going on? Do I stay in this trade? Do I get out of it? We teach you that every trade has a business reason, right? Long trades are based on the fact that there's no supply, right? There's no supply under VWAP. The market goes up to find sellers, right? When the market goes down, it is looking for buyers. There's too much supply and sellers are price competing, right? Those are the two business reasons for a trade. There's no other reason to take a trade. If anybody tells you different, they're insane, right? You go long because there's no supply and you're the supplier. You go short because there's too much supply and you sell next to the suppliers who are putting the market on sale. When they stop selling, you cover. Now, that sounds pretty simple, isn't it? The execution is a lifelong process, right? The other thing you need to learn how to do is adapt when markets change. They will change hour by hour sometimes. They will change from Globex to RTH because the agenda will change, right? When you go into business, there is a business agenda. You guys don't realize it because you're sitting in front of a computer at home in your bathrobe. But if you were working on the street and you were doing an IPO, your agenda is to take that stock from the smart money and put it out into the retail flow for a profit, right? If you understand how that works, you don't need to be an investment banker to figure it out. You just need to understand the difference between accumulation and distribution on a chart. Right? You don't need 400 technical indicators and 25 screens and all that stuff. Now, how did people trade, how did people trade like in 1994 when you had to refresh your screen by hitting enter? How did they trade in the 80s when you had monochromatic screens that just displayed the last price? And before that, before even electronics, and they were board markers and they'd write the price on a chalkboard, right? See, look, this is distribution. 95 to 97, you see how the candles have gotten smaller, right? There's sellers at 98, right? Because there's that stop up here on the market profile chart. You can see it, right? Right here. I promise today I'll figure out the drawing tools, right? So there is a seller here, a group of sellers. They're selling here, they stop selling at 95, and they're distributing what they bought down here up here, right? This is distribution. This is not for you to trade. So when you see a tight grouping of candles like this, there is no setup for a retail trader. Your best trade would be if we looked above 98.5 and came back in, right? So there are times where, you know, there is no trade. All retail traders, not 90% of them, all retail traders lose money because they don't know when the hell to stay out of a market. They're always trading at the wrong time because they have no clue what's going on. So if you understand that this is distribution of cheaper product that was acquired under 55.86, 55.89, you will understand that you have no business sticking your nose in this, right? If you were a larger trader, right, and you understand distribution, and say you wanted to build a short position here, right? So say you were building a short position of 5 to 10 contracts here. Well, that's your warning level, and 98.5 is your out. So if you were short 5 contracts and it starts taking out the highs of the previous candles, well, then you know, oh, the sellers are moving up because they see buyers. Duh, right? It's really simple, but you've got to think about it in common sense terms. So say you were short 5 contracts here at 96 and a quarter, 96, put some buy orders here because you know what? There's going to be buyers down here before that standard deviation. So make sure you cover, because if you're looking for all the way down, you might not get it because there will be some competitive buying here because people are short from 92. So they're going to come and bid to cover like they're doing right now. So say you're short 96 and a quarter, 90, 96 half, right? Put some bids in at 95. If you're short 5 contracts and you can't buy one at 95, it tells you, and the offer is moving away, right? So not only do we teach you when not to trade, but we teach you what to do if you get into a trade. Because anytime you tell somebody not to do something, they go and do it, right? That is human nature. Don't trade. I'm long, right? Don't trade. I'm short, right? It happens every time, right? So when you tell people not to trade, now what we do is we give you the tools so you don't blow up your account. So say you're short 96 and a quarter and you couldn't buy anything at 95. Start taking them back because the offer is lifting, right? If the offer gets up over 97, your goose is going to start getting cooked, right? Now, as the period opens up, it's going to be a little frisky. But look, why would you want to be short 96 when it's trading 97 quarter, right? So you make good business decisions, right? Trading is about making smart business decisions. It's not about psychology, and it's not about all, it's about understanding how the business works so you don't make dumbass business decisions, right? And you're not shorting where the offer is moving higher, and you're not buying when the offer is moving lower. And if you said it out loud, it's obvious. Oh, I'm not going to short a market where prices are not on sale. I'm not going to buy a market where they're putting the price on sale. You see, if you say things out loud, right, you'll understand how ridiculous it sounds and you won't do dumb things. Very simple. The execution's not easy, and it's something you have to train yourself, right? You have to train yourself to make good business decisions. That's what it's all about, right? Position is under us now, right? As London opens, London couldn't get any supply under 97, 96, like big green candle. So Had you been short, you could have covered and saved yourself quite a bit of money if if you act quick. I know people were shorting this. That's why I was telling that's why I was telling you how to get out of a short if you're trapped, right? Because this candle went from 95 to 5601. You're going to take some heat, and if it doesn't hold 98 and you're short 95, right? That's the only hope you've got is if it comes back down. But are you going to take this much heat on a trade as a small retail trader? That's not smart business to take unnecessary risks, right? I hope that makes sense, right? I hope that makes sense. You don't want to take unnecessary risks, especially in times. This market is in what we call price discovery, right? It's trying to find a bottom. So the last thing you want to do is take unnecessary risks in troubled times, right? Look how that liquidation candle came into where the little cost basis of distribution was, how it stopped and the offer moved up, right? That is very normal market behavior. Very normal. Now we'll try and distribute above 97, 97 half because they still have all this inventory here. They need to get it out, need to turn that inventory into cash. There should be responsive buying as we come into that B low, right? We're underneath it now. So for market profile people, or if you're using a half hour chart, you want to watch 99. And if we crawl back over 99, it means the shorts are bid and they're pushing price up, right? But if they sell under 99, it means the shorts have seen supply and now they're going to drop back down into this 95 area, right? So that is a look above and fail of 98 and change. So if you're doing a test short of the look above and fail of 98, and say you get some off at 96, 97, put that 95 bid in there. And if you don't get hit, manage your trade, right? So on the micro, I shorted 96 on two contracts, 96 and a quarter. When it couldn't get down, I had a 95 bid in there. When it couldn't get down to 95, I bought it back at 95 and a quarter, right? I just hit the buy ask button, right? And I'll do that trade again. There's bids at 95 again. So I bought one at 95, bought one at 95 quarter, and 95 half on three micros, right? That is the look above and fail. It looked above and failed. I didn't get the best trade location, but it's okay, right? Because I know that the sellers are going to compete, right? Yeah, hope is not the best strategy at all in business. Hope never works, right? Just manage your risk and manage your capital. Capital preservation is the most important thing in retail trading. In any business, capital preservation is the most important thing, right? Unless you have an insanely rich grandfather named Rockefeller or something like that, right? Or you have a money tree in your backyard. I remember one of the first trading rooms I was in, there was this dude. He goes, I don't mind if I lose 50 grand. I'll just go put another 50 grand in my bank account. I'm like, what do you got a money tree in your backyard? Tell me where you live. Of course, he disappeared. You know, Nothing for me to do right now. See, because we're in the middle of this green zone. There's really nothing for me to do. That's short. I should have been short 97, 97 half against 98 and a half. I'm a little slow this morning. I've got to admit, in the last 6 or 7 trading sessions, my reflexes are not what they should be. That's why I'm not trading any kind of a size, because I'm aware of myself, right? And that's another thing. Don't trade with your ego. Okay? Just don't trade with your ego. You'll get into really big trouble if you try and trade with your ego. Right? Just put your ego in a box. I remember reading Michael Lewis's Liar's Poker. And, when you work in the brokerage industry, they take your ego out and give it a good beating on the very first day of work. And they put you right in your place. There's no bravado on a trade desk for a rookie trader, right? It's just, it just doesn't fly. Humility, a lack of humility is what blows up brokerage accounts, what takes down brokerage firms, what's, puts people. And the reason I talk about this is not to be egotistical, because I've been humbled, right? I've also seen my clients rip apart brokerage firms and clearing firms, and you know what happens when a brokerage firm goes out of business? 150 people don't have a job the next day. So see, you guys, you don't have any consequences to losing money, right? But when you run a business, there's not just you, there's other people to think about. So when a brokerage firm or a clearing firm goes out of business because of stupid risk management, a lot of really good people lose their job. And once you've gone through that and lived through that and witnessed it, you'll look at risk differently. That's why retail traders have no concept of risk, right? I know I'm little bit on the preachy side today, but I got some messages yesterday from people who lost way more money than they should because they abandoned all their senses, right? You got to be losses are a part of business, right? Your job is not to lose money, right? So your job is to do business when the probability of losing money is less. That's why you have to that's why you have a setup, Travis, right? You have a setup because it's business. It is your ability to do business on your terms. If those terms don't present themselves, you do not do business. That's what a trade setup is. Like, I see movement, but I don't see a trade setup because it does not fall into what I want, right? I want to look below and fail of 92 half or look above and fail of 98 half, right? This tap dancing around the middle of this, you can keep it. The other thing is, get used to the order book being thin. What does that mean? That means there's not a lot of size on both sides of the order book, which means a large order can move price drastically, right? You guys talk about liquidity. I see a lot of traders going, oh, it's going to find liquidity here. They have no idea what they're talking about. Liquidity is the ability to transact size without adversely moving price. That's what liquidity is. And unless you're trading 5,000 E-mini contracts or a couple of hundred of them, you should not be talking about liquidity, right? If you're a 3-contract micro trader, don't worry about liquidity. Focus on your setup, okay? Gotta focus on your setup. There's a little look below and fail of 92. So I would wait to see if this candle holds 92 and a half before I went long, because I know that there's inventory above and I know there are going to be sellers at 95, 95 and three quarters. So if you are long, say you're long 93, 93 half, sell into this. Does this make sense to you guys? Okay. I need liquidity. Yeah, unless you got to sell 5 million shares of a stock or something, you don't need liquidity. It's funny when retail traders talk about liquidity. I think it's quite amusing. Good. It should be simple, Travis. It should be simple. It's not going to be easy, but it's got to be simple. So, where was the big cost basis before the move up? Remember, it was under 55.86, right? So, if you wanted to draw it up, this would be your accumulation and this is your distribution, right? When the market goes on sale, it's going to come back to where the wholesalers and the large traders acquired their inventory. That is the cost basis, right? Cost basis and inventory, right? Cost basis is how much you paid for your inventory. Then you try and sell it at a profit. That was the coin of bitterness, 82,658. It's just kind of hanging out, waiting for a bid. I missed it at 93. I was trying to buy 93 here. Slow, 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 slow. I wanted to go under 92 and a half and come back up, or at least wait for the next candle to go long because I'm not liking the way it's looking here for a long. Right, you could see that there was a seller there, and they came back here. See, and they're pushing it down. Yeah, right back down to VWAP. Maybe do a look below and fail of 89.5 up to 92. Let's see. Long 90 and out 92. Just a couple of points. I'm just scalping to get my, just trying to get my wits about me this morning. Oh, I could have held out a little longer. Okay. Good instincts, bad trade management, and I sold it too early. But that's the look below and fail when it works really nicely. Mostly swing trading ETFs. Do you have any training regarding that? I do. I do. The nice thing about the trade I just took, my friend, Matt, is the look below and fail. If you learn how to do it on a scalp, just to train yourself how to think, you can take that trade and you can expand it out. And for example, when the market does a move like this, like in a balance zone, say it doesn't take out 59.50, you can build a little position there and then sell it. You know the target is going to be 61.15. So for swing traders, this trade does work as well. The trade works because it's based on the oldest business principle there is. When supply runs out, price goes up. You do not need any particular system, right? I started out on Sierra. I love Sierra chart because it has never crashed on me since 2012. Um, it took me an entire Memorial Day weekend to set it up. I've spoken to the guys who run the company. They're really nice, but they're very shy. They don't really like talking to people. It's beautiful software, but you don't have to have it. I mean, whatever you're using, all you need is a 1 minute candle chart, a little bit of common sense, and some time. Right. The reason I want people to learn on a 1 minute time frame, and there's a reason, there's a method for my madness, is that's to get you to think quick, okay, and react quick. Because a slow trader is a dead trader. Okay. You need to be able to react quick, not to get into trades so much, but to get out of bad trades quickly. Because a lot of traders, actually all traders, lose money because they hesitate when they're facing a loss. Should I do this? I'll talk to this guy. What's going on here? Maybe it'll go back up. Maybe it. Listen, if the trade violates the business principle for taking that trade, you're gone, right? Do you know that rich people who trade like huge money, do you know how quickly they will get out of a trade or get out of a position if something doesn't even feel right to them? They will smash every bid, right? The people I used to trade for, and these people are $100 million, $200 million, $800 million people. Some of them were even billionaires. And when they are out of a position, there is no regret, no remorse. They don't need to think twice. They call me and they say, smash every effing bid that you can. They are ruthless. You need to be ruthless when you're trading your money, folks, right? It's your money. You worked hard for it, you know? Don't let these bastards just rob you blind left, right, and center. Be ruthless. I'm preaching a lot this week. I thought I would. I was really trying not to, but I've had so many messages from people from Twitter and from all over, even some in the room who weren't listening, and then people who didn't know any better. I'm like, yeah, you got to be in these times in a market, when a market is liquidating, when the market is in price discovery, trying to find a bottom, that's when you don't get cute. Don't think that you're smarter than the market, right? Follow a trade plan. You have to follow a trade plan. Now, let's see. There should be a seller. If we get underneath VWAP there at 89, you could probably short it back down to 84. If it crawls back over 90, that trade idea is bupkis. See how it's slowing down right there? When a market slows down like this, that's like, oh, okay. That's the large traders are working something out. Yeah, if you're interested in identifying accumulations of smart money, you might want to learn how to be the smart money. That's what I teach. If you've been trading for a long time, DM me. Like if you're already consistently profitable, because I don't know who I'm talking to, DM me on Twitter and we'll talk. Like if you're already a profitable, consistent trader and you're trying to up your game, I can help you with that. If you're just trying to hit home runs without learning the basics, I can't help you with that. But if you're already profitable, right, and you know what you're doing, I can definitely help you go from being a 5 grand a day trader to a 20 grand a day trader. That's not a problem. We're just going back and forth over we. It's hard to be consistently profitable, especially when the markets are changing continuously, right? The agenda of the business changes. You know, it's like riding a dragon made out of like jelly and teeth. It's not, and nobody just pops out of the womb knowing how to trade. I've never seen anyone in 33 years that just sits down and is a virtuoso trader, right? I've never seen anything like that. Right? It's a skill. It takes time to develop. But yeah, Matt, if you're serious, just DM me. I can help you with that. What's up in the room there? You guys still awake? So going forward, what are we looking for? As RTH keeps going, 55.84, big level to the downside. That overnight low, and remember those stops down here at 72 half, they are your pinata low. If you crack 72 half, all the candy above it is going to start spilling out because over the entire night's time session, any large size traders will be using that as their stop. Hey, what's up, Elliot? What time is it in Vietnam? 3:30. Cool. Fancy, DM me in the room. Maldives. Ooh, fancy. As is your name. That's cool. Well, it's a beautiful day in Liverpool. Sun is out. Seagulls are flying lazy circles. See you, Lonigan. Have a good one. We're wrapping up now anyway. And we're just selling it back. I'm watching 84, 55, 84. Let's see what it does when it gets down there. And oh yeah, for those of you who are wondering where that 55.84 comes in, it these are the levels. These these big levels when they are derived from this balance zone back in 2020, and that's 27.49 to 28.10. And I've been doubling them since then for 5 years, and they give me really, really nice levels to work off of. So the zone that we are in is 55.84 is the bottom of it. The top was 58.25, the middle was 57.04. So if we get underneath 58.84, the bottom of that zone is 53.42. So looking at the daily chart too, if you guys don't mind me just forgive me, I'm a little long-winded today. Look at that liquidation back in September down to 55.16. We just stopped shy of that, shy of this big chunk of volume. Now I know this is the futures and it's rolled over and it's not entirely accurate, but the chart doesn't lie. That's one thing. You know, stock promoters will lie, market makers will lie, deal guys will lie. But one thing is the tape, the transactions, here printed out visually, they never lie. So I'm watching 55.16 on my candle wax chart, right? Let's see what happens, right? Right. And then we've also got contract rollover. So we're splitting the contract, the volume between a couple of contracts. It's not the most ideal trading environment right now, but that's okay, right? Remember, it's going to be frustrating. Look at that. Look at just see how we came right to cost basis. Sorry, I was farting around on the other thing. Now, do you guys understand cost basis, right? I told you 86 down to here. We had that big chunk of cost basis. We sold it, put it on sale right back to where the top of it, right? It's beautiful. It's just inventory, right? It's just commerce, right? Make the donuts, sell the donuts, put the donuts on sale. Oh, people come into the store, raise the price of the donuts. That's it. I understand, Matt. It's okay. You don't have to trade futures, but if you want to learn how to swing trade, right, for a 2 week time frame, give me a DM. Be happy to help. And come visit us at Micro E Futures. It's not just futures, right? We have an equity room, crypto. We're like Sears back in the day. You wanted to buy underwear and get your tires rotated. We'll do all that. We have all products. We have people who trade oil, commodities. We even have a couple of people who trade cheddar cheese. Uh, Not for me, but come out for 7 days. I promise you, you'll learn some practical trading knowledge. All right, folks. Time for me to get on the treadmill. Girlfriend's looking at that step counter, and I can't put it on the dog anymore. So I will be off and see you guys later in Globex. Thanks for joining us on YouTube, everyone. I'm supposed to say like and subscribe. That's what I'm supposed to say, right? Like those young kids. So, yeah. And reach out if you need help, okay? I know it's a difficult market. If you're having trouble, reach out, DM me, VWAP Trader One on the Muskosaurus platform. Thanks, everyone. Bye for now.